Luckin Coffee's latest earnings report has ignited a heated debate among investors as strong top line growth collided with margin pressure and renewed frustration over the company's listing status. For Q4 and full year 2025, Luckin delivered impressive revenue growth of 32.9%, underscoring that demand for its products remains robust despite a highly competitive operating environment. The company also crossed a symbolic and strategic milestone: over 30,000 stores, further cementing its scale advantage in China's fast growing coffee market. With 98.4 million transacting customers, Bowles argue that Luckin has built a distribution and digital ecosystem that is difficult for competitors to replicate. However, the excitement around scale was tempered by softer profitability metrics. Net income declined year over year in Q4, and GAAP operating margin narrowed to 6.4%, reflecting the lingering effects of aggressive pricing competition and higher operational costs tied to rapid expansion. Earnings per share also fell significantly, disappointing traders who had expected margin stabilization as price wars began to cool. The immediate market reaction was negative, reinforcing concerns that revenue growth alone may not be sufficient to sustain valuation expansion without clearer profit acceleration. A major source of ongoing investor frustration remains the absence of any firm update regarding a potential U.S. exchange relisting. Since its delisting from the NASDAQ in 2020, Luckin is traded over the counter, limiting institutional participation and liquidity. Many shareholders had hoped that operational progress and governance improvements would pave the way for a formal relisting timeline. Instead, management offered no concrete commitment, fueling speculation and disappointment within the community. Some traders have gone further, alleging that the stock's pre earnings dips and volatile post report trading patterns reflect deliberate market maker tactics designed to accumulate shares at discounted prices. While such claims are difficult to substantiate, they reflect broader frustration with the stock's stagnation relative to its operational growth. On the bullish side, long term investors argue that the core story remains intact. With pricing pressure easing and competitors scaling back aggressive discounting, Luckin may be positioned for gradual margin recovery. Its unmatched store footprint, digital ordering model, and brand penetration give it a structural edge in China's coffee boom. Supporters believe the current compression in margins is cyclical rather than structural, and that operating leverage will return as expansion matures. In short, the community is deeply divided. One camp sees a dominant market leader scaling at extraordinary speed in a secular growth industry. The other sees slowing profitability, unanswered governance questions, and a catalyst, U.S. relisting, that continues to be postponed. Whether Luckin's ultimate scale translates to sustained margin expansion remains the key question investors will be watching in the quarters ahead.
Okay, so the stock has been showing some weakness within a longer term bullish trend. Its 200-day moving average, which underscores its underlying trend, is still sloping bullishly upwards. So since the 23rd, it's been printing lower prices non-stop. So this is now the fourth straight session of losses, and the algos are saying that he may continue to do so up till Wednesday, the 4th of March. After that, we might see a bounce that might remain in place up till the 19th of March. After that, a further contraction, another contraction may play out. So all in all, we can say that the stock is actually consolidating. It's not actually, yeah, that's what's going on right now. Before we get to that, let's see what the projections are saying. 36.25 and then 36.35. Those are the upper projections. Then downward projection of 33.86, 34.77. Okay, pretty much in line with the theme that the yeah, pretty much in line with the consolidation that it has been printing. Okay, so let's see now what we have here. The reason why it's consolidating, or yeah, see, the reason why it's consolidating is you can see the structure is such that the 10-day moving average is above the 200-day moving average, and then the 200-day moving average is below the, sorry, 21-day moving average is below the 200-day moving average, and then the 40-day moving average is below the 21 and the 200. So the structure should be such that I mean, if it's not consolidating, if it's rallying, if it's not consolidating, then you will have the structure such that the 10 will be above the 21, and then the 21 will be above the 40, and then the 40 above the 200. But right now it's all mixed up because it is consolidating, you know. So if you were declining, you find that the 10-day moving average, if it's declining and not consolidating, then if it's correcting, then you may find that the 10 will be below, and then above it will be the 21, and then above it will be the 40, and then above that will be the 200. But right now it is a mix of things. Some intermediate, some mid-term, some okay short-term above the long term, and then the intermediate below the long term. So that's a signal that the structure is not in the proper order. Yeah. So let's see now what we have on its weekly chart. We saw that earlier on. There are no extrapolations there, but we might see some projections there. On the weekly chart, the projections are saying beginning from the least 22.32, 25.43, 30.46, 49.84, 57.02, 61.45. So there are ambitious projections on the daily chart or the weekly charts. Okay, so let's see what the price pressure momentums might show us. Let's see whether we have any alignment. Alignment in the sense in the form of the moving averages aligning with the extrapolations. Okay, I think we have some alignment. Yes, to some extent. Yes, yeah. So momentum is expected to continue to weaken up till Friday the 6th of March. Then after that, we should see an increase in momentum. The stock is expected to rise above its 10-day moving average. Yes, then by the 11th of March. Okay, but there's no guarantee that that will be the case. But I think what we have an alignment with this extrapolation and the extrapolation of its 10-day moving average. This moving average is, let's see what we have. It's still losing 57 cents, 57 cents every day. Okay, not trending at all. Obviously, the stock is down 4.66%, so it's not out of place if it's declining. If that moving average is losing money. Positions opened 10 days ago are not in profit. That's also what it's indicating as well. Let's see what the 21-day moving average is indicating. Yes, pretty much to some extent in line, but quite flat as well. Not much volatility is expected. So whatever's going to happen may not really affect the 21-day moving average drastically, but it's pretty much in line with what we have on the 10-day moving average and also what is extrapolated here, but not very much. So the volatility is expected to be there, but it's going to be a lot more far-reaching on the 10-day moving average, not on the 21-day moving average as such. And this moving average is currently doing what? Okay, still gain. It's gaining 45 cents every day. So positions opened up to 21 days ago are in profit, but not the ones opened 10 days ago. Let's see what the 40-day moving average is going to show us. Okay, it's indicating that yes, to some extent, some alignment. Okay, yeah. Let's see now what the 200-day moving average is going to show us. I expect to see one going out of sync because they are not, the structure is not in the proper order. Let's see what the 200-day moving average is going to show us. It's flat as well. It's flat. Yeah, pretty much flat. So flat at least up till the 17th of March or thereabout. So yes, you can see not aligning with all of them. So as things stand right now, it's I think it's gaining, still gaining. Yes, roughly not in trend mode, just neutral to bear, neutral to bullish, neutral to bullish, gaining roughly 4 cents every day. Positions opened 200 days ago, just slightly in profit, just slightly in profit. So whatever is going to happen is not really expected to affect the 200-day moving average adversely up till the, let's see here, up to the 18th of March. But after that, it may begin to affect it. So yeah, let's see now. Positions opened. Oh, sorry. Let's see here now. $40.8. What's the probability of that printing? Not very high. 40.08, not very high at all. Okay, so that's what's going on right now. The stock is trending. Let's see how all of this will pan out. And thank you very much for watching this